Guys, today we're talking about volume top to bottom, okay? We have talked a little bit about volume in terms of CVD in the past. I do have a video on YouTube in regards to CVD, so we're not going to touch that topic today. But today is going to be a pretty jam-packed course. We're going to be talking about naked daily point of controls and just point of controls in general. We're going to be talking about the VWAP. We're going to talk about the volume candles on the bottom, as you can see here. We're going to be talking about the VPVR and the FRVP. So a lot of abbreviations, a lot to talk about. It's going to be a long lesson. Hopefully you don't get sick of my voice the way I get sick of my voice. But, hopefully I'll be able to teach you guys a couple things here. So if you're new, welcome. If you're returning, welcome back. To the YouTube people, make sure you stick to the end of the video and you grab the VIP code for my Discord, and make sure you join the Discord if you haven't done so already. I post my levels in there and my trade setups, and I give you guys live real-time analysis on what I think is going to happen up next. So make sure you join. We also have a really good community with a bunch of traders. But yeah, you guys already know that. And of course, if you like the content, please like, please subscribe, please comment, do all that fun jazz. All right. Let's get into it. Let's start with the candle volume here on the bottom, okay? So in terms of candle volume, we have talked about tick volume, which is our vector candles. That is not what I'm referring to now. Now we are referring to these candles down on the bottom, and this is what would be considered your traditional volume, okay? To be honest, there isn't really much to talk about here. It's nothing like groundbreaking, but a couple things that you need to know. When you're looking for a strong move, you want to see the move being backed up by volume. What do I mean by that? Obviously, you can see our peaks and valleys when it comes to volume in general, right? Let's take a look at these two big candles right over here. Let me get my draw tool. So we have these two big candles here, which we're on the 8-hour time frame, okay? So this isn't like a pretty, it's not a crazy move, but give or take, we'll say 5% move. We want to see a breakout happening that is backed up with volume. Now, in this case, we obviously had market cipher B giving us our bearish divergences, and we want to follow the money flow on market cipher B. But in terms of an actual breakout, a legitimate breakout, we want to see high volume. We want to see it backed up. And if you can see here, like this was the candle that broke us out really, right? So we were in this sideways range for however long that was. Actually, it even goes further back. We were in this sideways range. And once we had our break, we had a massive amount of volume on the bottom here to carry out the move. This volume candle was the clue that this was not going to roll over and be a fake out. One of the clues. Keep in mind, you're using it with confluence, okay? You're not just looking at a candle like this and then longing or shorting based on that. Of course, everything I say, you use it with confluence. But when you're looking for breakouts, you want to see large volumes. You want to see the move backed up, because that's how you know it will be a continued move. Of course, you can jump down on the lower term time frames. This is the 8-hour time frame, so take that with what you will, but you want to be looking at that. Another way you can be looking at volume is, like, guys, we're looking for volatility, and your volatility typically will not happen under low volume. So let's take a look at this range here that we've been in for so long now, and we're all super bored of. But let's take a look at the volume spikes even within this range relative to our breakout. If you can see, it is significantly lower, okay? Our entire zone here, we're kind of like very low volume, especially the last end of it. After we had this drop in this now more recent local range, you can see the volume over time is decreasing, okay? We're very low volume, and this is why we're just doing nothing. This is why we're consolidating. When volume is super, super low, there's no interest. Nobody's trading. There's no volume to back up, any move. And that's why before stream I mentioned that it's a little bit frustrating trading Bitcoin right now, or really any asset in the crypto market, because it just seems like you hit your entry, you hit TP1, at least for me, I'm speaking for myself. You hit TP1, and then you just get stopped out at the entry because there's no legitimate moves. Again, this is the 8-hour time frame. Let's jump down to the hourly. There's look at this. Like, there's nothing going on here, right? There's absolutely nothing going on, and that coincides with our volume. And for those who don't know, Bitcoin apparently, I don't follow the news, but apparently was at an all-time low in terms of volatility, which means it hasn't been doing anything. Like, this is an excessive amount of time for price to stay within $100 range, right? What happens as soon as we get our followed through volume spikes, that's when we have somewhat of a move, okay? Another way to look at your volume is to look for divergences in your volume. So just as we would with our market cipher B, which I'm going to put away here in a minute, just as we would with our market cipher B, you can use the volume bars as confluence with your market cipher B to look for divergences. So if price is increasing, but the volume is decreasing, that would be considered a divergence. Now, I don't use each candle as a divergence, like each single candle. What I mean is I'm looking at the candles as a whole. Okay, let me actually go to a higher term time frame. Might be easier to see if we can find one. Right here is a good example. So I don't look at just this high of the candle to this high of the candle and say, okay, we have a divergence, right? I don't just do that. I look at it over time as well. So if price is increasing, but the candles are decreasing over time, that would be a divergence similar to your money flow divergence. Okay, I feel like I iterated that not in the best way. I basically look at it in the same way that I look at the money flow on market cipher B, not in terms of just the waves. Like the money flow, you never really connect the tops exactly. You just kind of look at the whole shape of it. Whereas, of course, with the waves in the VWAP, you're looking at the exact points, okay? So that's going to be your volume candles. Nothing really to write home about. I'm not going to be honest. A lot of the times, like, I'm not even looking at it. I am looking at it, but it's not my first point. Like, when I open up a chart, it's not the first thing I'm looking at. Like, that's probably my last, if that, because Market Cipher already does a good job of illustrating what's going on. But it is an added confluence, and it is good to know. Okay, so that's your volume candles. Before we continue, does anyone have any questions in regards to that? No? Okay. Let us continue. Next, we are going to go over our VWAP, okay? VWAP was a highly requested topic. I just figured it makes sense to put it in the volume thing. And like I said, this is probably going to be a longer course, or a longer lesson, I should say. So I figured I would throw it in. Now, your VWAP stands for volume weighted average price, which essentially takes, it's what the name says, it takes the average of volume within a certain number of candles. It is a dynamic support and resistance line similar to your EMAs, okay? So dynamic, for those who may not know, it moves with the price, right? When the candles move, it moves because it takes an average of your candles. The difference about the with VWAP is VWAP at the start of a new trading day will snap to price. Okay, so let me show you what I mean by that. Let's see, where's the new day? Yeah, right here. Okay, so we're going to use this as an example. So we're on the 15-minute time frame, right? And I want you to see how on the 15-minute time frame, this is our average line, right? Your EMAs are never gonna just shoot down exactly like you can see right over here. They're going to be smooth. Even if price just has a significant drop, it's never just going to do that because it's an average. Your VWAP will snap to the price on the candle or on the daily open, right? So as soon as it hits, for me, it's 8 p.m. EST. I don't know your own time zones, but as soon as it hits that, your VWAP will just magnet towards the price. And it's sort of like, I don't really know, the like reason behind it or the science behind it or anything like that, but it gives price an opportunity, I guess, to like reclaim, like to have the opportunity to trade above or below the VWAP again. So like sometimes you can get very far from price, like down over here. And in that case, if it was just going to be an average, remember, it's not like an EMA. So It's not going to eventually catch up to it. It's just going to snap to it. And then it gives the opportunity for price to either once again trade above or below for that day. Now, there's a couple things to note when it comes to the VWAP. Number one is the smart money, the institutions, the big money. They do not sell below the VWAP, and they do not buy above the VWAP. Okay? Remember, the VWAP will snap to price on the open, but it does not. They only buy below the VWAP, and they only sell above the VWAP, right? So that's an important thing to know, especially when you're considering your divergences and so forth. Now, when it comes to the VWAP, it's a little bit different than your EMAs because it's a daily kind of thing that you're considering. You want to look at it more intraday as opposed to over longer times like you would with your EMAs, right? So if we pull up our EMAs on the 4 hour, for example, like, let's look at only the 50 EMA, the cloud here. We can see clearly that it's just static and, eventually price will come back to retest it at some point, or the EMA will follow the price. Like either what will happen is price will shoot up, will consolidate up here, and then the EMA will join it eventually over time while we consolidate, or price will just dump and then meet it there. The VWAP, you're considering it in more of like day trades and scalping because it resets and it comes back to the price every day, right? And the more price hangs around the VWAP, you'll see it is a very strong dynamic point. Look at what happened here. We're on the 15-minute time frame. As soon as we sharply broke the VWAP, the dump continued. There was follow through. Okay, you can see here VWAP was tested there on the 15-minute, and this was our Brinks box trade for the day. And unfortunately, the Brinks failed us today. So if you took that trade, I mean, it's just kind of the way that the game works. But it was right off of the VWAP. Here we have. Look at this, price is exactly glued to the VWAP. Let me get rid of the TR main. Price is glued, it's very reactive to the VWAP. Look, just absolutely glued to it. And then as soon as we finally get a clean break, that's when the move continues higher. We get the retest and we continued upwards, okay? Another thing to note about the VWAP is unlike the EMAs, as I just mentioned earlier, the VWAP typically is expected to be tested within your day. Okay, so if you haven't been trading, if you haven't touched the VWAP throughout the day, it is very likely that at some point you are going to test the VWAP. So if price is above the VWAP and it hasn't tapped it or tested it, you may want to reconsider longing. Let's just say, where was the new day? The new day was here, right? So this was our new daily. I mean, it kind of touched it, but let's just say. Here we had our break, right? Right here we had our clean break. And let's just say that this tap never happened yet. So we'll say, I'll go replay mode. We'll say we're here, okay? You might want to reconsider longing right now because, yeah, the day opened, but we hugged the VWAP. And as soon as we broke out of it, we are expecting a VWAP tap. You might want to reconsider it. And let's move forward and see what happened. I mean, you could have longed and put your stop loss below somewhere along the VWAP. Obviously, you're looking for key levels and whatnot. But really, your time to long was right there because we had that retest. And by the way, also, the longer the price hangs around the VWAP, the more times it'll tap. It will never do this. If the VWAP is like this, price will never just stay here. It will it'll either break out and then trade above, and then on the new day it'll zoom in like that. It'll magnet to the candle open of the new daily. Or if the VWAP is like this, what they'll do is they will they'll dance around the VWAP. It's a very, very reactive, dynamic line, and it's important to use in confluence with your other indicators. Obviously, you're gonna have your market cipher B to watch for divergences at the VWAP, which happens. but it's important to know, especially when you break out or break down, either way, you are looking for that retest. And if price has been away from the VWAP for quite some time, you are expecting it to at some point recover that. And this is, I'm talking mainly for the scalpers and the day traders. For the swing traders, not so much. You're looking at the 4-hour time frame. Like, there's nothing really to write home about here. Like, it's price is just at the VWAP. It's just how it is. And that's only because there's only 4 candles before it zips back to the candle open of the new daily. So that's the VWAP in a nutshell. Obviously, there's a little bit more to it, but for the sake of keeping you guys sane from hearing my voice all day, and we got a lot to go over today, so we're gonna skip past it. But that's really the main things that you need to know in terms of your VWAP. Does anyone have any questions when it comes to that? Following so far, yeah. You could look at increasing volume as more people buying when starts. Yeah, I mean, if you're in an uptrend, sorry, I'm just going to go back. I'm just reading a question for the YouTube people and I guess for the Discord people. Someone in the chat just said you could, back to the candles on the bottom here, was like you could look at increasing volume as more people buying. So when volume starts to decrease, it shows less buying pressure. That is true if you're in an uptrend, of course, right? Like if you're in an uptrend, you want to see the volume continuing. And as the volume starts to decrease, especially if you're getting those divergences, that's when you can expect price to follow through. It's just the follow through, right? It's kind of like looking at open interest in a sense of, the commitment of traders, really. Like how much volume, what's the interest? Remember, market makers' role or job is to increase open interest at all times, right? And anyways, we've already talked about that. Okay, so if everyone's following the VWAP and everyone is following the candles, the next thing we're going to talk about is the fixed volume range profile, which can be found on the left here. Fixed range volume profile right over here. We're going to go over this and I'm going to go over what this means, but let me just say, so there's this, and you guys may have heard a term called VPVR, which is volume profile visible range. This looks the exact same and it functions the exact same, but you'll see it over here. Like you'll have your black wave here, your peaks, whatever. You'll have your point of control, your value area high, your value area low, and it will adjust based on whatever you can see on the screen. Okay. Yeah. I don't know where it is. So, make sure you guys are in the Discord and I'll follow up with that. I don't know why, and I don't know where, and I don't have the time to go through it or the patience, and I don't even use it. But anyways, it functions the exact same way. Okay. Yeah, so this is our fixed range profile, okay? And this is what you use to analyze volume within a certain range, or if you're using the VPVR, it's your range would be considered your entire screen, okay? Now this we have talked about quite a bit in our how to trade ranges tutorial. We've talked about it, and if you guys are in my VIP Discord, you can see this all the time, and it's very helpful, and we're going to talk about why and how you can use it. So if you guys have been around, you should know by now that this is called our value area high, this top line. This is called our value area low, and this is our point of control, okay? And what this is essentially is you're analyzing a range, right? Or if you're using the VPVR, it's all your candles, but you're analyzing a range or wherever you draw it from. Like you could technically draw it from anywhere, right? Whatever price action is within that, whatever you drag it to is like what you're analyzing it. For me, I typically use it for trading ranges. So right here we had a dump. We're on the 4-hour time frame. We're on a dump. If you can see clearly here, we have a low, we have a high, and this is our range, and this is our fixed, and this is our fixed volume profile for that range, right? Typical, very easy, nothing too crazy there. Okay. Now, as I mentioned in my how to trade ranges tutorial, when you are above the value area high, typically you are looking for shorts. And when you are below the value area low, typically you are looking for longs. Okay. Now, these levels are very respected, and it can give you, in my opinion, a very objective support and resistance zone. It gives you reference to where you are in the chart, okay? I mean, at all times, we're trying to understand where we are in terms of what is considered high and what is considered low, especially when you're trading ranges, okay? And this is an objective way to do it, because when you're drawing support and resistance lines, like just based on price with if I drew a line right here, then okay, like sure, that could be support and resistance, like give or take, but it could be here, it could be down here, it could be here, it could, like, you know, it's very subjective. This sort of objectifies, that's not the right word, but you know what I'm trying to say, it makes it objective, okay? Where you have your range, it's a very clear range, and it pulls the lines for you, it pulls the levels for you. And to be honest, it's actually more important than what you can see based on your eye, because it's volume, and volume is commitment in the charts. So these are the most important lines, especially for the ranges that you're trading. And you can use these to establish what is high and what is low. Now, when you add confluence of other volume indicators, like the candles that we learned, like your other technical analysis that I've taught in other videos, and like your VWAP, which we already established is a very dynamic support and resistance line, you can really get a sense of what may happen next in the market. And obviously, you're going to be looking at market cipher B. Okay. Now, there's a couple things you need to know when it comes to your VPVR. First of all, these colors on the left, yours is not going to look like this. Yours is going to look like this. Nope, not like that. Yours is going to look like this when we first open it, okay? I'm going to share my settings with you guys, and then I will actually post my settings in the Discord later for whoever is watching it on YouTube or doesn't have their charts open right now to follow along. But I'll show you what I do for my settings, but this is what it's going to look like by default, okay? Where your value area low is the darker part, like where the shaded out part versus the very colorful part crosses, like right here, this line would be your value area low. This line would be your value area high, because here it's shaded and here it's not shaded, right? But I just make it look a little bit easier, and I'm going to show you real quick my settings so you can see. First things first, I changed the row size to 200, okay? And I have my value area volume as 70. I don't know what the default numbers are, but that's what I do. And if I go back to the default, you'll see these little ticks, which I'm going to explain in a minute. They're going to get thicker. So you're going to see, you see how they're thicker? So when I make it instead of 20, okay, that's still 70. So instead of 24, when I change it to 200, watch the ticks here on the left, right? It's going to get, just going to get a little like more detailed. We can see, so all it does basically is give us 200 candles as opposed to giving us 24 candles. And it can really help you just get a little bit more detailed with what's going on in the chart. And if I were to even increase it more, it would get more detailed, but I mean, you don't really need to. But anyways, that's how it works, okay? Let me go back to my template. And let's go over my settings. So that's the very first thing that I change. And I'm going to go over what all of these mean in a second here, but I just want to show you guys my settings for it. So I have 200, and then the colors, it's up to you guys on whatever colors you want to use. I keep the value area high zone as grayed out and the value area low zone as grayed out as well, where the colors are in the middle, which is considered fair value, which we'll talk about as well. And then the only difference really is I take away the background, this histogram box, right? I don't need that. I don't like that. So I get rid of that. I just make it all the way to 0. And then I click the lines for the value area high and the value area low so I can see them very clearly. But I mean, this is completely preference. Like, you don't need to. You can see that the shade stops there, but I just like it because it's a lot easier for me. And then these are my colors. I mean, if you guys care for my color code, I don't know why you would, but there it is, right? If you want it. Fed 564. Okay. All right. I guess it's the first time, a good time to mention that my first digit for the VIP Discord will be a 2. So there you guys go. Okay. So those were my settings. This is our fixed volume range profile. And is it fixed range volume profile? I keep saying that the wrong way. But yeah, and the VPVR works the exact same way. Okay. So when it comes to these lines, again, anything above value area high is considered overbought. It's considered overvalued. and anything below is considered oversold or undervalued. And price is always trying to find equilibrium, which means it wants to find what is considered a fair price, which for this range would be this little section here. Most of the time, when price breaks up above it, it will fall back in. And most of the time, when price goes below, it will come back in until eventually we do have a break. And I'm going to show you an example of a break here. So here we had a range. And the range was like this. Oh, whoops. Oh, by the way, I also don't have extend right on usually because I need to be able to analyze multiple ranges. And then what happens is sometimes we have ranges within ranges. So you can see there's a clear range here. Let me get rid of these lines. You guys get the point. So there's a clear range there. There's a clear range there. But you could also argue that this whole section is a range. So what you could also do is you could pull one like this, which kind of gets a little bit messy now. But if I got rid of the other two, you'll see like it's just like the entire range. So you can play around with it. You can do what you like. I usually, in this case, I would have a range here. I would have a range here, and I would have a larger one just for additional confluence. But anyways, that's preference. You guys got to play around with that. But here's an example of when we broke it. So look, we established our range. We went above. We came back into our value area. We technically very shallowly broke below, but that's okay. We came to the top. We came to the low. So you can see that price likes to dance around here. And just in general, when you're above value area high, you shouldn't be longing. When you're below value area low, you shouldn't be shorting. You should always expect price to come back in. Unless, of course, market cipher is showing you something extremely different, but you should not be doing that in good practice, okay? And if you are, make sure you're managing your risk accordingly. So what happens now when the price breaks out of it? Okay, well, now this older range, we're not really worried about for the time being, but you can use their old range as support and resistance lines again. Now, something that I didn't mention yet, but I'm going to now. Let me get rid of market cipher because we don't need it. When price comes back into our value area low, let's say we're below, right? When price comes back into our value area low, it is very probable that price will hit our value area high, okay? I heard that there's an 80% chance of it. Where that number came from, I don't know. I can't give any more information than just that. Like where I learned how to trade, that's what they said. Sure, I'll go with it, whatever. I don't really focus on numbers like that, but just know that when price comes back into our value area low and it can hold it, it will typically reach the value area high, if not at least the point of control. Okay? So this is a way that you can set targets, right? When I'm going to make a video on how to TP in general because there's many ways to do it, but this is a way that you could do it. So if you were to catch a long from, let's just say you caught a long from like here, you're long from here. Well, what you could do is you could have your TP1 at the value area low, your TP2 at the point of control, and your TP3 at the value area high. And then you can let the rest run. And what will happen is eventually, if you trade this way, again, this goes back to my trading ranges video, but what will happen is you'll be long from here, and you'll be short from here, and you'll be long from here, and you'll be short from here. And then eventually the price will break out in one way. And whatever position you had remaining after your take profits, you will use to ride the larger move or the breakout down or up, right? So that's how we trade the ranges. Let's get rid of all this. But yeah, that's how we trade all the ranges, and that's how we can use the volume profiles. Now, what happens is, again, the reason that this happens is this is equilibrium, right? This is like what's considered fair value. And these lines, the value area high and low are important because it's sort of like considered a the market accepting the price back into the range. Okay, so remember, Bitcoin is only going to be worth, or any asset for that matter, is only going to be worth what people are willing to pay for it, right? So if nobody's willing to buy it at 30,000 anymore, but now people are willing to buy it at 29.5, then its value will drop. And vice versa, right? So people are looking to buy it now at 29.5, but our old value area low is here, right? If we can get accepted, if we can get accepted back into this older range, then the market is accepting the fact that Bitcoin is this price. So they're willing to trade at this price. If it gets rejected, then people are not willing to trade at this price. That's how you have to think of it, right? You go to a car dealership, you want to buy a car, you want to buy a Tesla, and it's 50K. Cool. If no one all of a sudden is like, oh, I'm not buying it for 50K anymore, they're going to change the price to 40K. Right? The market maker's job is to is to peak the interest. But this is how the value areas work. So what I'm expecting here, and I don't know what's going to happen next. Obviously, nobody does. But let's just say we finally break out of this very annoying range, and we do reclaim and hold this old value area low, which is a very key level. This is very key, 2990, whatever, give or take. A very key level. Break it and hold it. So we broke it. We technically SFP'd it, right? But you got to hold it. And it's what's going to happen is you're going to stay around here, dance around here, and then continue. If that happens, it is very likely that price will eventually make its way to the value area high. Okay? And especially if that happens, then I would very much so consider this larger range. So you might even say that price would even come up here. I shouldn't be using yellow because it's all the same. My bad, guys. But you could even argue that it would come back up here. Okay? But when you're trading this way and you're using the fixed volume like this, you need to make sure you're taking the profits. TP1 is value if you're shorting, value area high. TP2 is point of control. TP3 is value area low. Okay? That is, so actually I went over it I didn't actually go over it, sorry, my bad. The white line, so we went over the value area high and the value area low. The white line is our point of control, which is considered the absolute fair value within the range that you are analyzing in terms of the volume, okay? So that is the most sticking point. That is like basically the average of that section. So this is what's considered the most fair. And it is also a reactive support and resistance, just like your value area high and your value area low. However, remember what I said, you can expect price to reach the value area high once you break through the value area low. But that doesn't mean it always does. But if you break the value area low, there's a very high probability that you're at least coming to the point of control or at least close to the point of control. Okay, you can see here, we actually didn't come down to our value area low. We almost did, but we didn't quite touch it. But technically, like this is support from our point of control because we couldn't close below the point of control. So that might be the clue that we're going to continue higher. Whether or not we do is a different story, but you know, it's definitely a possibility. Okay. The last thing, the last thing that we got to talk about in terms of our fixed ranged volume profile and the VPVR is these like little lines. Okay. Now let's get rid of the value area high, value area low, and point of control for now. Okay. I will never actually have it like this. You need to know where these levels are. But I want to talk about like these peaks and valleys. Okay. What this is within your range. Actually, I'm going to do it on this larger range now because you guys get the ranges thing and I want more, like I want it to be bigger. So let's do that. Okay, beautiful. Look at this. And then we'll get rid of these three. Okay, so these are peaks and valleys within price at a certain level. Okay. So these candles on the bottom represent volume based on time. And these candles represent volume based on price. Okay. What these peaks are called, it's called a high volume node. Okay. This here, let me change the color. Sorry. All right. So these are called high volume nodes, all of these peaks. I mean, that would be one, right? All of these little peaks are considered high volume nodes. I mean, here we didn't really have like too many up here because we haven't been trading there, but these are considered high volume nodes. Now, these are important because price likes to come to and stick to and react to high volume nodes. All right. Price will typically, when we're consolidating, be at, it will be at a high volume node, right? Remember, it is volume based on price. So what happened is it's basically support and resistance lines. So when you're drawing your support and resistance for the day or the range or whatever, you could theoretically like put a line there, and you could like just label it if you want to. I don't do this. I do it by eye, but you need to know it at least. You could write high volume node. Here we have another high volume node. Here we have another high volume node, and so forth, okay? Look at what happens when price comes down to a high volume node, right? We broke this range. I mean, it's hard to see now because the candles are hiding behind it, but we broke the range and we bounced off of this high volume node. Okay? Price will, in general, move from one high volume node to the other. Look at here. We have this support down here, and price has stuck around here. Again, this does not mean long every high volume node or short every high volume node, but it's important to know that when you see, for example, a red dot on the 4-hour on market cipher and you're getting a red X, you could say, okay, well, we have to assume that we're going to stay within this range, right? We don't know if we're going to continue to dump, but if we don't, we can expect somewhat of support to come in here. And of course, you're going to do your analysis within this like mini range if you choose to do so or whatever the case is, but this is how you're going to use it. Okay, so you're going to take a look at where it could go and say, okay, well, there's a high volume node there, so it makes sense. And this is more within the range. Look at this, right? So you could say, oh, Geo, like how do I know that wasn't even drawn in yet, or like in terms of time? I mean, it wasn't even developed. Well, let's do this. Let's go back to when the I'm gonna put my lines back because I just need to explain the high volume nodes. But so let's go back in this point in time, right? Let's just say we didn't know what really to expect. Let's go here, right? We're getting some green dots. We don't know what's going on. Like we don't know what's going to happen next. We're getting some green dots. Okay, we get our pump. We tap our point of control, which happens to be the highest volume node within the range. Okay, that is your point of control. It is the highest volume node. So we hit that and then we reject from it because we have a high volume node. And where did we actually reject to? Well, I mean, we came down below the value area, low of the range. But then we came back up and we hit our highest volume node once again. Okay, later when price came down, we got rejected. I mean, this was kind of the value area low, but more so up here, this range from our point of control. So this is where I'm looking. I'm looking at this volume node, high volume node, and I'm looking at this high volume node. So you could consider that to be a range, and price got rejected right from there, right? So this is what you're going to do to analyze your time, or sorry, your volume based on price. You're going to use the fixed volume or fixed range volume profile. Okay, I have a question. So it's like Tino's hybrid system, vector candles recover, is it? So it's not really, because the thing with the vector candles is it doesn't like, okay, so I use it in Confluence. I always use my vector candles, and you guys know vectors are my favorite thing when it comes to trading. But that could be used to, let's actually pull up my vectors. Let me show you. Let's hide the EMAs. So this is how I know when we're done with a range or when we're not, for example, right? So let's use this as an example. Let's say we're analyzing this entire range. Okay? Right now, today, as you can see, we're on the 4-hour time frame. We're trying to come back into this range. Remember the game. This is why we're getting so much resistance here. Remember the game. When we hold here, we can expect to move up to here. And this is without even looking at the vector, okay? Don't even look at the vector yet. When we claim value area low, the market is accepting to trade Bitcoin at this price, right? So the first target, if we're trading on the 4-hour time frame, would be our point of control, which would happen to be a swing failure pattern of this high right? And maybe even these highs, actually probably even these highs. So I would imagine, right, just by looking at it, and we also have a red vector here. So what I would imagine is price to come up, take all of these highs, right? Take all the highs, maybe come up 50% of the candle, let's just say, and then dump down. Or it won't make it that high up. It'll just take these highs and then come back down. And then depending on what happened within the candles here, remember, we are shooting for the value area high, but we would have taken profit here, stop loss to the entry, right? And then depending on what happens here, we might come down, we might tap value area low again, or we might use one of these high volume nodes as support. So we could come down to maybe here, right? Because we have, let me draw a line so you guys can see. So that would be one, and that would be one. So price could come up, we could come back down. Oops. Price come up, come back down, bounce off this line, and then continue to target the value area high. Or we could come back down to here, continue to target the value area high, or come back and hit the value area low to eventually then come back up to the value area high. Now, I wouldn't say that this option is probable. I would say it's more likely to bounce off of these high volume nodes. But that's how I would be using the vectors in confluence with the ranges. And that's why when price is dumping like this, like right now, let's just say I had a huge spot bag and I wanted to sell, but I don't want to sell now because we're at the lows. Like I wouldn't really focus on, like I wouldn't sell it now because we have the vector above us and it's in confluence with our value area high. So if I was going to look to sell, it would be somewhere up here. It would be somewhere up here. It would not be where we are now. Okay, so that's how I use the vectors. That's how I use the vectors in confluence with the value areas. And that's how we can use it to make some trades. So right now, again, like full, I still think that we're going to break this range to the upside. I've been saying it since here. We did break down. Now we're kind of in this mini range. I mean, I don't know. I don't know what's going to happen exactly. I can't. Why do I have these levels here? Let's get rid of these lines and labels for now. Yeah, but this vector is too much liquidity to leave behind, in my opinion. Now we don't have to come back for it. Maybe I'll eat my own words again because I kind of did over here. But that's how you would analyze an overall range, and that's how you look at the vectors. If this was no vector, then I would be like, okay, maybe we're not going to come back up here. But I'm expecting at least at some point 50% of this candle to be recovered. In which case, we wouldn't have hit the value area high. No problem. We come back down. It doesn't happen all the time. But it's very, very probable that you at least come up to the point of control. So that should be your TP1. And guys, you can use this on all time frames, okay? Like, it's not just macro. Like, if you're scalping on the 5-minute time frame, let's get rid of these lines now. If you're scalping on the 5-minute time frame, you could just do this. Look, so let's say we're going to consider this to be the range ever since this dump. So we're going to consider this to be the range. Look, no different. We're on the 5-minute time frame. You're scalping. Price comes above it. We come back below. Above, we get accepted back into the range. It hits the bottom. Come up, dances around the point of control, hits our value area high, gets into our value area low, comes back in, almost gets to the top, doesn't quite make it. No problem. Break below. Like, you guys get it. Like, you know, it gives you a very clear and concise, like, reference point. What is considered high and what is considered low on whatever time frame you're on. Because right now, on the 4-hour time frame, we're considered super low, right? I'm not going to pull it again, but you know, you saw the whole video, the fixed range was there. We're considered low, but on the 5-minute time frame, we could be considered high, like we were up here, right? So that's kind of how you're going to look at the volume. Does anyone have any questions when it comes to that? This is very important, guys. This is a very, very crucial part of trading. It's very important to know this and understand it. So please, if you guys have any questions, you can now unmute and let me know. Nope. Shall we continue? Okay. All right. I'm glad you guys are. Can you guys even just text if you guys don't want to talk? Like, just Give me a thumbs up in the chat or type 1. Type 1 in the chat if you guys are following me. Beautiful. All right, that's what we like to see. Okay, let's move on. What's next? So, this next indicator that I'm going to go over is you do need to have premium trading view for, and it's this one here, SVP, which is session volume profile. So if you don't know, you go to indicators, you just type session volume profile, and it's this one. It's not HD, it is profile, okay? Basically, long story short, when you're on HD, depending on the time frame that you're on, the levels change. I don't know why, and that annoyed me for like months, and I didn't know what I was doing wrong. But yeah, make sure you just press session volume profile because it stays fixed depending on your resolution on like how zoomed in you are on the charts, okay? So this will look familiar to you. Let's get rid of this here. Now that we went over the fixed volume range or whatever, so fixed ranged volume profile, we're going to go over the SVP. Okay, let's get rid of our TR main. We don't need it right now. Okay, all right. This will look familiar. Just the colors are a little bit different, but it will look familiar. Now, what is this? This SVP shows you a fixed range volume profile for your daily. So these are the daily candles, and these blue lines are, again, these are just my settings, right? Like you guys can change your settings to however you want. But if you could see, the blue is the point of control. Okay? The point of control is important because we're going to find something called naked point of controls, which I'm going to explain now in just a minute. But you can see on the daily candle, we have 1 point of control per candle. Okay? Which is what the SVP is. If I change it to 4 hour, you can see across 6 candles, how many candles? 6, 12, 18, 24. Yeah, across 6 candles. That was like embarrassing that I had to do that math there real quick. But anyways, across 6 candles, you can see the SVP in a little bit more detail. So you guys are understanding. It is just a fixed range within the daily time frame. Now, this is important because we can find something called naked daily point of controls. Okay, what is a naked daily point of control? Well, when I'm doing my TA, this is a very important level that I'm always watching. And let me show you what it is right now. So, naked or daily point of controls typically like to be recovered when left behind. What do I mean by that? Let me see if I can find an example of one that was like recovered. Okay, we'll say this here. So this is what I do, okay? Let's just say this is the day. This is our day. Right now, we have our SVP. Where's my SVP? All right, we have our SVP. So to pretend today is August 23rd, or sorry, August 1st. This is considered a naked daily point of control because your point of control has not been, your point of control has not been recovered. Real quick, the second number for the VIP Discord is going to be an 8. Okay. So your second, your point of control has not been recovered. We know, like, well, you don't know, but now I'm going to tell you. The point of controls like to be recovered within the next, it doesn't have to be the next candle by no means, but they like to be recovered. So what we're looking for is a retest, at least, of that daily point of control. So let me show you what happens. So here, if this was real time, when you start your technical analysis for the day or whatever, you pull up the SVP, you get on the daily time frame, and you find all of the levels, and I have it even here for my ndpoc. So you find all of the levels that haven't been tapped in terms of the point of control. So let me show you another one. Right? We have another one up here. Right? These ones have all been tapped. Right? If I were to draw a line right here on where it was, well, the next daily candle tapped it, like it went beside it, like the price crossed where the point of control was. So it's irrelevant to us now. Look over here as well, right? So there's one right here. I put my point of control. A couple of days later, we wick up. I don't know how well you guys can see that on stream, but we wick up and we take that what was a naked daily point of control. Okay, so let's go back to our example now. I hope I'm explaining this like clearly for you guys. But let's go to our example now. So we close the candle up here and we can see the point of control is here. There's nothing to the right of it. So at some point we are anticipating price to return to our naked daily point of control. And the only reason it's called naked is because it hasn't been tapped yet, which is, I guess, kind of like ironic. Maybe because after you get tapped, you put your clothes on. I don't know. I just thought of that right now. But anyway, so let's see what happens. So the next candle, look at that. Literally, like, okay, we didn't actually take it. We were off by $3, but I mean close enough. Okay, close enough. Would I consider that have been tapped? Honestly, I don't know. Like sometimes the exchanges don't give the exact price and whatever. So this could have been taken on some exchanges and not taken on others. I probably would still leave it here. And I would probably write like ndpoc like question mark or something. Or like I'd write meh or something like because it was tapped or, you know, whatever the case is. But you can see price likes to come back and recover that area. Let's continue forward and see what happens. Bam. Now we actually clearly took it. So we don't need to have this level anymore because it took it. And then you do this every day. So I'm going to get out of replay mode. So you do this every day and you find your naked daily point of control. And as soon as it's tapped, you can remove it. So this is one. If I come to my actual Bitcoin chart, you'll see my ndpocs right here. I have them ready. And I got alerts on mine. Here we didn't take it. What happened in the example 2 seconds ago that I showed when I showed you we didn't take it? We were off by $3. A couple days later, we came and we took it. Am I expecting this to get touched? Absolutely. Am I expecting this to get touched? Absolutely. Which one first? I don't know. But I'm expecting it. Do I have a long orders here? Yes, I do. You guys know I shared this in my VIP stream. I'm actually a little bit bummed that we didn't come down there. Maybe we will in a couple hours. But point is, these are very, very strong and like when you have confluence with, I'm doing this on the fly, so I actually don't know, but let's see. Like we got our 786 right there. We also have this 786. No, not really this, not really that so much that one. We got a 786 right there along with, let's see, do we have any, we got a weekly level there. We got a daily level there. Monthly, not really, but like we got a lot of confluence here. But when you add all of the confluence along with a naked daily point of control, oh baby, you know they're going to come for that. Why do they do it? I don't know. That I can't really speak on. But, you know, that is a very, very strong part of my technical analysis is following these. Now, the SVP doesn't go back all the way. As you can see, the candles kind of stop here. I just make my point of control this light blue because these are the colors I make my ndpoc. Obviously, you guys can do your own. But yeah, it doesn't go all the way back. So unfortunately, unless you're using exo charts, which I'm actually just starting to use, but when I learn it, I will teach you guys it, but I'm going to need a couple months for that because you can get it a little bit more efficiently than this way. But anyways, doesn't matter. This stops at a certain point, no problem. Just find the ones that are close enough, and you can do it that way. So let's do, I'm going to pull up a random thing, and I'm going to show you guys some examples of ndpocs on how I would do it. So right here, actually, we got a few here on Caspa. This is technically one. Go here, we'd write ndpoc. Cool. Control V, this is the second one. This is the third one. This one here got tapped by this wick, right? So we're not interested. This is a fourth one. I hope I'm not going too fast for you guys. This is a fifth one. Right? So at some point, we'd expect to come down to these levels. Now, we got some above us too. Right? We got one up here. Hasn't been tapped. We got one way up here. Hasn't been tapped. Okay. So right off the bat, you can expect some traders. Oh, you can do that in SVP? Let me see. Oh, man, that's actually very helpful. I didn't know you could do that. Oh, wow. Okay, so thank you. I literally didn't even know you could do that. That's crazy. I'm still going to do it this way, but this makes it way easier to map it out. Okay, let me change this to default. Okay, so sorry, someone in the chat just mentioned that you could extend the point of control to the right. Let me just save this now as my default. I didn't know that, but this gives you, it's a lot easier now to see. Yeah, then you can map it out. Okay, this makes it way easier, man. Anyway, that's how you're gonna do it. Okay, that's what your SVP is. That's what your naked daily point of controls are. I look like a fool now, but nonetheless, I'd rather me look like a fool, and now I gave you guys that information than me having to do it again later. Doge is pumping right now. I hope I'm still in my long. I don't remember if I am. Okay. Anyways, that's the SVP, and that is your naked daily point of controls. Does anybody have any questions when it comes to that? No questions, guys. So if I ask you questions and I put you guys on the spot, you'll know everything. Okay, you guys are quiet today. Oh man, I'm not in my long. Wow, I can't believe I'm missing this right now. I closed my long because, are you kidding me? Wow. I closed my long because we were doing stream and I didn't want to get stopped out. Yeah, typical, man. Happens all the time. Anyways, yeah, Doge is I'm actually, this is so annoying, man. This is so annoying. Anyway, that's fine. Okay, guys, that is really volume in a nutshell. I mean, today was kind of a long lesson. It's been an hour. I mean, maybe not too long, but it's been an hour. And Doge is pumping, and I need to figure out how to get back into this trade. So if you guys don't have any questions for me, I will leave it there. I hope you guys enjoyed. The third and fourth number are going to be 1 and 2 for the VIP Discord. So make sure you guys join the VIP Discord. As soon as I post the video, I will let you guys know. And as always, if you guys like the feedback, if you guys like the, or sorry, not the feedback. Wow, I'm so stupid. If you guys like the content, please subscribe. To the YouTube people, if this is your first time here, again, welcome. And make sure you join the Discord. I really appreciate the support. Guys, we're almost at 1,000 subscribers. I'm like 30 subscribers already away. And that's just crazy to say, like, how far we've come in such a small time. And you guys have been so good to me. So I really appreciate the support. I really appreciate the help. As soon as I get to 1,000, I'm monetized. So you guys know I'm taking this full time. But yeah, thank you. And then again, join the Discord. We got over 500 people in there now too. So, you know, this has just been a great ride. Any last comments or questions or feedback or anything from anyone? Speak now or forever hold your peace. Okay, well, that's it then. Thanks a lot, guys. I will start posting my setups. I mean, I post my setups anyways, but I'll give you guys my setups with now information on the fixed volume or fixed range volume profile mainly, because that's the main thing here. All right, YouTube is done.